Hey traders, this is Roberto, and this tutorial I'm going to focus on price action using stochastics indicator and pivot points. It's a new indicator. I love using pivot points. I haven't used them before, so I wanted to give you an introduction, send this out to you, so when we do um, talk about them and use them in the trade room, you've already been introduced and you have some sort of idea of what I'm doing. Okay, now we have pivot points as simply numbers that are calculated from the day before. So the open and close and the high and the low of the previous day, those numbers are crunched and it gives us the pivot points for the next day. We have a central pivot point, then we have R1, R2, R3. These are resistance levels, and S1, S2, S3 are support levels. And the idea is well, let me just explain how I see pivot points. And I'm going to change the central pivot point just to highlight the main pivot point. And I look at main pivot point as home. So if price prints above the main pivot point, starts going north, we're in an uptrend. And as further away it gets to the main pivot point, hits R1, maybe R2, then it starts to miss home and it starts to go back to the main pivot point. So it's just waves. It's just market taking off in the direction, then it's overbought, and then it turns back down and goes to the main pivot point. Now that's a main resistance level, it's or rather support level. But if it manages to break this level, then we're in a downtrend, and the price goes below the main pivot point, starts printing lower, and then it may stall out at S1, S2, and S3, and very much like the supply and demand indicators, pivot points work the same way. So if we have a kangaroo tail, a color change candle at any of these support levels, then we would take a trade going the other way, a counter trend trade. When the market or candles are above the main pivot point, we're in an uptrend. If they're below the main pivot point, we're in a downtrend. So that's how we're going to view the pivot points in general. And I just like to, that's how I relate to the main pivot point. Is just anytime the market takes off north, it's like going on holiday. Takes a vacation, this is its home, and it starts going north, and then it starts missing home. And then that's when you see exhaustion candles, and then the market turns around and comes back. Okay, let's look at a chart where price is below the main pivot point. Here is the Australian Canadian dollar. Here's the main pivot point. And notice that price is below the main pivot point, so our directional bias is bearish, so we want to be selling. And this is the Singapore session right now, and the market's trending down. So we want to be selling if it's below the main pivot point. Now, it's hitting these support levels, so it's too late to even take a trade, because this is, remember that resistance, when it's broken, becomes support. And it's bouncing off that level there. Now, if it manages to break that level, then of course this would continue to go south, and it is trying to do that. And it is below the main pivot point, so technically it should sell off because it has broken a swing low here. So the market's in a downtrend. Okay, so that's how we're going to be using the pivot points on this charting software. It's a little bit clearer. I like using, this is Duca's copy, charts, and we're still going to be using the stochastics 21 and 14 moving average line for identifying directional bias change. Like here we had a color change candle on this 1 hour chart, and we would enter a trade 8 pips below this candle. Notice that stochastics indicator was overbought, so that was a great trade right there at a previous resistance level. Okay, see everyone tomorrow at 5 a.m. Eastern in the GoToWebinar meeting. What's interesting, what's great is that now I don't have to send you a link every day. You just log on to the members area and just click on the link and you'll be connected every day. Okay, see you tomorrow, guys.